The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. We're looking at the Dow on this Tuesday, the very last trading day of January, and we'll look at some of the monthly charts in a moment. But let's just look at the Dow first. The Dow is now up about 11 points, really struggling. It was not a very good action yesterday at all. And that big smash from that Goldman Sachs and Travelers Dow stocks slump back in mid-January, we haven't recovered, because if you're looking at the Dow now up 19 at 33,736, look at the S&P. The S&P actually managed to climb higher. It managed to almost test the 4,100.96 double top high of the 1st and the 13th of December. But look at this, the high that was made at 4,094, I think it was, yes, 4,094.21 on the 27th. We had an ugly session yesterday and today trying to climb back. It is certainly walking the 9-period exponential moving average. Nothing to complain about. It's just that it seems to me, based on the some of the technicals, that it's going to be a little bit of a struggle here. Just even though buying comes in for fund managers get the money and they put it to work. You're looking at the QQQ. So the S&P at 4,031 needs to get to the 4,047 level within the next 2 days, because if it pulls back and it goes under today's low of 4,020, and it's 11 points higher than that, if it starts to trade about 4,015 in the next 2 days, says, uh-oh, we're in a digestive phase after a very, very strong move up from the end of December. Looking at the QQQs, same thing, the 200-period moving average became resistance, and that corresponded to the 296.88 high of December the 13th. Yesterday's, 3 days ago, the high was 298.26. So it went a little bit higher in leg F. This could be an alternate count. I'm not ruling it out, because the MACD is good. The 9 period's over the 14. The stochastic still at 87%. Very good. On balance volume is good. Relative strength has pulled back quite sharply, but it's still pretty good at about, I'm guessing, at about 60%. So what we're looking at here is there's going to be a bit of a struggle, and the struggle is going to be around the 295. I call it 296. 200-period moving average resistance, but fabulously pushed higher last week into the above the inside track repellent zone. Hopefully that all becomes a propel. You've got the green line, which is at about 283 as support in the QQQ's weekly chart. You've got the, where is it? You've got the 9 and 14. The 9's just barely crossed positive, but it is also at about 283. The price right now is at 290. And it seems to me that there's a chance that we are making a peak E, and we're going to be pulling back some, and we're going to be watching this very closely. Looking at the IWM is holding a lot better. This is the 4th week out of the inside track repellent zone. It's at 187.82. It is up 91 cents, holding very nicely at that peak D. If you look at the left side, right side price time match in the cup formation, look at that. We've made a beautiful 2 cups within that. Let me show you. This is the inside track repellent line. It went above it, and now it should be struggling a little bit, which it is. And the 200-period moving average of 184, I think that's like a magnet. And the reason why I pulled some of the buys that we had for today from my opening call newsletter is because I think that when I dug down and I looked at the charts, the charts said to me, don't be too complacent here. Even though you're long, don't add to the long positions, because there's a lot of choppiness that it doesn't have to be a big meltdown, but I think choppiness is the actual word of the week. And we'll see whether or not that's correct. But in the meantime, back at the ranch, if you're looking at the XLK, this is the select. It's gone to a leg E. It's gone to a peak E. This is Select Tech Spider Fund. So many D's and E's and F's even in the Chapman wave methodology that there's on the daily charts, I can't ignore that. To me, I always say, get a little cautious when you get that. Usually we go short. I didn't want to go short. I still see enough strength to say it's not any deep pullback, but it could be a little surprising in that we do pull back here when a lot of people are thinking that we should continue running. But there is a rotation. I'll go through that because I had some questions here. Let me just get to, I got it already, so I don't forget it. So the 200-period moving average of 134 in the XLK is kind of support resistance. It's a magnet at this particular point. We're looking at, let's go to this in a little more detail. So gold is holding it really nicely. It's down to at 1937. It actually plunged to the I say plunged because in this case, you don't usually see that, but we've seen it for 4 sessions now, some weakness in gold. And my contention here is that while gold, the weekly chart is still in leg C, you have to wait for the whole on through until Friday to see whether or not it takes out the continuous contracts. So the number I give you now could change, but that number right now is 1966.5, and that's the high of last week in January. And I'm watching that closely. The MACD is good. There's nothing wrong in the weekly chart. The daily chart says that the MACD did turn down. The stochastic has gone under 80%. The on-balance volume is overbought and has come down now. The relative strength is weakening. It's just that 9-period over the 14 says it's got to plunge. It's got to get down to the 1880s to really see the 9-period go under the 14. But in the meantime, and for subscribers, we've taken a little position here, but I'm thinking very strongly in terms of trying to be as brutally, if I can, it's very hard to be isolated, to look at this objectively. I believe that we're looking at the candle that we're in right now for the day. The 1929 14-period moving average is going to be really important. If there is a close in the next 2 days under 1929, that is suggesting that we've gone to a sell signal. You see, I've got a question mark here. I usually make that question mark red because it says, is it going to be a down arrow to say you've got a sell signal, maybe even going to a sell mode? I don't know yet. I haven't got it, but I'm suggesting to you that you've got to be a little careful with gold, not because the upside, that you can move to the upside. I think the upside is kind of limited. It's what happens if the downside holds. And the reason why I'm spending time on this, because look at silver. Silver's been in this rectangle move, although it's a very, very strong arch formation. Let me just add this, extend it to the right, and add inside you've got the rectangle. And all I'm saying is that midpoint is we're under the midpoint now for 3 out of 4 sessions, actually for 4 out of 5 sessions. And that's just suggesting that the weight of evidence says that silver is starting to weaken a little bit. The technicals are definitely starting to weaken. The 9 has gone under the 14. But the weekly chart is still holding. It keeps holding the 14-period moving average of 22.99, or let's call it 22.90s. The low today is 23.05. I'm watching this closely because this has been, the metals, the gold and silver have been the go-to place for quite a long time, since the September low, actually. And all I can say is that when you're looking at something like this, money will keep drifting to this sector as long as it's good. But when it stops holding, money could exit very quickly in the short term, that is. I'll be right back. We're looking at crude oil. Since we returned, crude oil is up 42 cents, but is in the lower range. I'll be back in a moment. Dow's up 33, S&P's up 14. I'll be back, Basil.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So this is a gray leg A in the dollar. And it's the first time in a while that we've actually got a gray leg A that is above the 14-period exponential moving average. We have to go all the way back to about the 9th of January. We had the big spike to the 200-period moving average, and then it got repelled very sharply. And we went down to 101.50, and we're trading not even a point higher, 102.28. But if you look at the little silent doji in the weekly chart, you look at the symmetry of 101.30 back on the week of the 3rd of June, and you look at the low that was made on the 20th, okay, I should have put the date in, right? 26th of January. There we go, 1, 2, 6, 23. The symmetry there says, if that silent doji, in other words, this is in the Chapman methodology, we're looking at this bar right here, the 20th, the week of the 20th, followed by another very small plus sign, which looks like a doji, meaning it opens and closes at the same price, and a higher move. If there's a close this week above the high of last week, which is 102.43, we're at 102.26. We did go higher earlier on, but we're not above it now. That would suggest that you can start looking at the next level of resistance, which is 102.90. That's the candle on the week of the 20th. And only then can you even think about talking about this particular candle, the 13th of January, with a high of 103.94 and a low of 101.99. That is a big candle, and that's something that I would look at. So it's just step by step. But in the meantime, look at the EUR-USD. That's the euro. Made a peak F. I'm calling it an F for now. And it almost looks like the dollar in that it's pulling back, but it's very reluctant to pull back because some of the technicals are still strong. And until the 9 starts to weaken and actually goes underneath the 14-period moving average, this is still in a bullish phase. And the weekly had a doji candle, the reverse of the dollar. It had a doji candle, a very tiny plus sign. And it's incredible when you're looking at charts to see a tiny little plus sign either at the top or the bottom of a huge move in something like a monthly chart, and every once in a while you get it, and that turns into a fabulous reversal candle. So we're watching this on the weekly chart to see if there is a reversal here. We haven't seen any confirmation yet because we haven't even closed. We've gone below the 14-period moving average in the daily chart. The low today is 1.0802. We're trading at 1.0846, a little bit higher. And look at the USD JPY. This is the yen. Now, this yen is doing the same thing as the Dow. The dollar is attempting to move up steadily, and it has done that, but it's not making higher highs, but it is making higher lows, and that's kind of important. So if the yen, only if the yen starts to trade, it's a 130.02, down 41 ticks, only when it starts to actually trade, you can't even just touch it, it's got to trade there for a couple of days above 132, well, we finally say, great, now we can see some kind of a pullback in gold, and we can see some kind of a rally in the dollar, and that will say, aha, are we going to look at the reverse, the inverse of the market, meaning that finally with the dollar rallying, maybe we get some kind of a pullback in the general market, and that's really what I'm looking at here. And I just mean a kind of a rotational correction where some things have done really well, and I'm going to go to that in a moment. But let me just first say natural gas, lower lows and lower lows and lower lows and lower highs, and oh man, and it even made, today it hasn't made a lower low yet than yesterday. That low, today's low is 2.614 in the continuous contract, and yesterday the low was 2.612, woohoo, 0.02 away. And the UNG did take out the left side low, and it's now at 917. Remember I said you've got to, if you're even thinking of going long, you've got to have the tighter stop, and I would rather lose money not by buying on the way down, but seeing a rally and then trading the rally to say, okay, now let's see higher highs and higher lows, because the tide is turning. Right now, we haven't even got a confirmation that the tide is turning. So I've done a bunch of those things. I don't want to take too much time on the TLT. I just believe that the TLT bond yields are in a range. That's all. So Greg wants to know AEHR. AEHR. Here we go. AEHR is air, test systems, contact wafers, singulated die, module panels, multi-die modules, system level products. I don't know why I wrote all that, but that's what it said. Anyway, it's in the semiconductor area. It had a spectacular move from 17.05 January the 5th, and it pops up to just a little bit. So it goes from 17, it doubles. It doubles to 36.92 on the 26th of January, all in 1 month. Now it's pulling back a little bit. So have a small position much lower down, which is a core position. I would like to add to the core and also add a trading position. What levels would you look at for both ads? So in this particular instance, absolutely nothing wrong. It is the 9 is way over the 14. The MACD and the differential, 9-period differential, is still way above the moving average of 26 periods. The stochastics flat at 86. The relative strength is pulled back. I'm going to make a suggestion here. This is a little unusual in that it has been such a great winner. I think there's a little bit of vulnerability here. Normally I would say right here, because you're in so nicely as a trading position for 2.5 points. 2.5 points is a very nice percentage gain. I would start another position right here, but I'm going to make a different suggestion. I want to wait a day or two. And the only reason is because if it closes under the 14-period moving average below 33, somewhere in the 32.76 area, then the 31.86 14-period moving average will become a magnet. It'll just drag the price towards it. And since I'm only looking at about 1 to 1.5 points on the upside, because it'll be more like a double test of the peak D high that was made at 36.61, it is a very strong leg E in the weekly chart. It could even be a single leg A to the upside. It has that characteristic, but everything's positive. I don't see anything wrong with that. I'm just talking market-wise. You can see the market's sort of stalled over the last 2 days. And AEHR error, however you pronounce it, test systems, also stalled. So normally I'd say just take a little nibble here at 34.11. well, I'd have a 50-cent stop, and if it gets to the high today is 34.70, if it gets to 35.01, I would put my stop at a 15-cent or 20-cent profit and just let it ride up. The moment it gets to 36.92, I'd say take at least 2/3 off and keep one-third because it's a trading position. The longer-term position, I would just have patience. I think you're going to get a longer-term add to between 31 and 30, maybe even 29.50. So that's why I'm saying as a trading position, right now I'm saying step aside. It's market-wise, I'm just saying to you, I think it's a little risky now. I see rotation into some of the deep cyclical sectors. That's still very good. But I'm just suggesting to you that I don't see why you should take a 50-cent risk on a 1 or 1.5 point or 3-time potential gain, when in fact it is just a trading position, and it's a risky trading position right now. So that's it. We'll look at Shopify. Also questions about Shopify. A couple of people I want you to know about it. It's trading up 1 at 48.61. I'll be right back. Guys,
if you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, we're back and we're looking at the Dow up 70, S&P's up 21, just a slow creep to the upside, and that's buying pressure right here from the end of month, beginning of the month. So I'm going to come back to a question about swim in a moment, but I want you to finish up Shopify doing really nicely over the last, since the low that was made around about 32, traded all the way up to the 50 area. It's trading right now at 48.93 after a red candle day today. Yes, these are beginning. This is the whole thing about this rotational correction, that within the context of looking at the market in a bifurcated way, in other words, looking at what is weak What has been strong and is now weakening, and that's Exxon Mobil. Not weakening in the sense that you want to short it, just that it's digesting big gains, and it's still fabulous. But it is all I can say is that it is making higher highs, but at the same time, the momentum that it had from earlier on is not quite the same. Shopify is the one that came down, just pummeled from 176 down to the 32 area, 23 area, 2305, way back. I think it was October of this past year, and now is rallying. And this should start to, I'd say that the rally should start to peter out in a short while. The 45.92, let's call it 46 200 period exponential moving average, should become a testing ground. But at the same time, the low that was made at 23.62, we might not go back there. I think some of these have really done very well. So the question was a small position in 35.16. Wow, congratulations, at 48 right now. I would like to add, if I count F/B, where's that? F/B, and was looking at a pullback to around 45. Oh, so I've got peak A right there, peak B, peak C, peak D, and now it just rallies up and it's E. It's just an E. It could be E/A because that's an instant restart right there, potential. When it's this long in leg E, usually it's not an instant restart. Usually we get maybe an F and a G and it pulls back and you start a new buy mode. So yes, everything about what you like, I agree with. We might not be able to see a new recovery high of 50.38 to start 30. Whoops, what did I say? 50.18 to start a new leg to the upside if the low that was made yesterday is taken out in the next 2 days, and that is 47.05. But it's acting really nicely right now. It's an inside bar. It's up $1.61 at 48.60. Where to add? You see this very strong leg C in the weekly chart, and it's only a leg A in the monthly. So where to add? I would have two. This one is one where I'd have two separate mindsets. One is right here at 48.87. So it is 3 points to pull back. 2 to 3 points on a $48 stock. Wow, this is really tough. The reason why is there's nothing technically wrong here. I'm just looking at this and saying my eye says it's a tad overbought and it should pull back towards the 46 area where the 200 period moving average is. But the way it spiraled over the 200 period moving average, just ignoring it, didn't even come back to test it once, is very, okay, this is different. Shopify for your second position, and just an add on, and I would only call this a trading position. I would add right here at 48.94, even though I think the market is kind of vulnerable, the bigger part of the market, but not the small caps, not the stocks that were fantastic and are trying to rally now, that have already had a major move to the downside. So if you're prepared, look, today the low is 47.73. I would have a very tight stop. I'd have a 47.50 stop. It's at 48.96 right now. This is where I would add, and I'm only treating it as a trading position. The benefit here is that if you get it at 48.96, and by Thursday afternoon, it's actually testing this 50.80 area, that the further we get away from the 200 period moving average, the better it is. So that's very different to what we're talking about in air. And I'm going to say in this particular instance, even though the market is a little bit vulnerable at 48.92, I'd say, yep, now you can add just a little bit. It's a trading position. It might turn into something better than a trading position, but treat it as a trading position. Okay, next question came in, ExxonMobil. Just quickly, ExxonMobil, as I said before, this is in a sweet spot. It's almost, in a way, it's kind of like looking at gold. Look at gold. It's just, now it's up to 2.5 at 19.41. I don't think gold is, at this particular point, has the strength right now. It could do that in about a week or two. It could probably make a peak C this week, and maybe the following week it goes to a leg D. I don't know. I just think on the very short term, I'm watching it to say it's becoming a little bit vulnerable. And Exxon, in a way, is becoming a little bit vulnerable just in terms of the shorter term. So I hope that helps you in terms of the Exxon. I would not get out of your core position. I know that you've had it for a long time, the questioner, and I would keep that, and I would trade around it because I know that you're looking at trades. But in this particular instance, just hold on. Let's just see if it holds 110 support over the next 2 weeks. I'd even say next week. Or if it breaks into the 118s. If it goes to 118, that's fantastic action. All right, folks, I got a question now about swim. So what was the question here? Basil, that A on swim. Oh, yeah, let me explain to you what I'm looking at here. In the Chapman wave, it took me a long time to realize that the start, you remember, we're always looking at a peak D as your buy signal to buy mode upgrade, and that you can get to a peak C1, C2 by just missing it. In fact, if you look at this one here, I wonder if that's the case here. Look, there's your low in October, around about the 3.30s, goes to peak A, then it goes to a peak B, and that's a gray A and a gray B. But then all of a sudden, it's really strong. The stochastic's over 80%, and it goes to a C1, and then just fails to make the D, but it goes to a C1, C2, which acts as a D. And remember, my rule of thumb is if the stochastic of whatever you're following, 1 minute chart, monthly chart, doesn't matter, suddenly pulls back from over 80% and within a couple of bars goes whoosh down again, be really careful. And that's what happened here. It made the arch formation, plunges down to the 3, below 3, it goes down to 2. Swim, SWIM, this is called, what is it called? It's called Latham Group, Inc. Do they do swimming pools? You never know these days. Some companies try to be clever and they abrogate. They take something and they use it as a symbol, but it's actually not. Yes, good pools. So look at the low that was made at 275 on the 22nd. That goes to peak A. That A has a lower high, another A right there. Sometimes I get a little tired of typing them all in, but then it pulls back sharply. It holds the 2.7. I should have typed that in. 47 was it? 2.47, 2.75 low of the 22nd. I may as well just type it in since we're talking about 2.75, and now I can't remember, 11.22, I think it was 22. All right, so that low at 2.75, that's an A, that's an A, that's an A, and each one goes to lower lows, but it does not take out the 2.75 low. Then that goes to an A, and then all of a sudden it rallies to a B. That's a B there as well. It's underneath that B. That goes to a C. That goes to a D, and now you can start E/B. And you've got your cup formation. I'll just lopside cup formation. I'll draw it in the break when we get back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Also, what we're looking at here is SWIM, which is Latham Group Inc. They do swimming pools, and we're looking at the analysis. So now the difficulty here is where I usually go to the left side low to make a Chapman wave inside wedge target repellent zone. Is a particular method that I use, and using that method, here we go, and that says it stopped right at the resistance. And that by the 8th of February, there's a chance that it should test the high that was made on the 2nd of November of 4.79. So that's the way I'm doing it right now. So I hope that helps you. And if it starts to fail, it's going to fail by taking out yesterday's low of 4.09. A close below 4.09 says, uh-oh, now you've got to look at an arch formation as it failed to get there in the requisite time and price. That's the price time match. Next question came in here, and I'm going to do this if I get to it in a moment. Here. Yeah, could I look at FXI? FXI had a spectacular run from the low that was made back in October in the 21 area. It traded 3 days ago at 33. Now that's an index. That's the large cap China index. I mean, that's something. So I've got this as a peak E and then a peak F, and this is another reason why I'm saying just in the shorter term, I'd be a little bit careful about the market. As I say, we are still along our Dow positions, we're along other positions, but at the same time, I took off one that was infrastructure only because I wanted to see how it acted today. If it was strong today, and so far it's actually quite nice, it wouldn't have gotten to our entry point in any case. I want to be able to figure it out from today's close being the end of the month and what happens in February. Another one we put in, we're waiting for a drop in this particular one because it's the big clue to the economy actually going right out for maybe 3 months or 4 months, and we'll see if we're going to be able to get that. And we have a steel stock, and it's holding very nicely. We've got others as well. So what I am looking at right here is what could curtail any upside action. And this particular moment, all I could say is it's some fear factor. Maybe it's the Fed. I don't know if it's the Fed. I mean, we look at the interest rates. If I look at the TLT is trading. It's just stuck in a range. It's not a big deal. It's come way off the lows, meaning that the yields have come off the highs. And now it's just digesting those gains. So I don't see anything to get too excited about. A question came in about, whoops, where did I write it? Could I look at AN? AN is, this is a stock that I've followed for years, but we've never really owned it. I think there was one moment we had it for a brief trade position, and it was successful. And then I just, for some reason, AN AutoNation, I remember seeing the guy, whoever he is, outside one of his showrooms talking about it. Very articulate, works very hard. I've always liked what he says. And sometimes the stock just does not follow what he says at all. I mean, I like what he says in terms of his thinking, but in reality, I remember sometime in this big sharp pullback, was it this one? Yeah, I think sometime in this sharp pullback, I remember him talking about his stock, and it sounded like it should be going up from everything he said, but it didn't. So all I can say is this looks to me like it's a very strong leg. C to the upside in the daily chart, 124.02 up 83. And Jim, you're long, so I'm going to just say congratulations, you are long from lower down. I just wouldn't do anything right now. Let's see. Look, GM had a very good. Was an earnings report today. All I know is I saw GM on a ticker go by much higher. Yeah, GM right now is up 2.90. That's great, right at the 200-period exponential moving average. This is a stock that was at 14 back in March of 2021, screams up to the 60s, drops sharply, comes back down to the 30 level, and now it's at 39. And what is it doing in the weekly chart? It's tackling the inside track repellent zone. And it's just got into it. It's got into it many times before. In fact, the technicals this time are a little bit weaker than it was before, but it's not even the middle of the week. The 9-period moving average in the weekly chart has crossed positive. That usually allows you some upside action. So it's wonderful. I love to see General Motors in our economy doing what it's doing right now. Actually, if you look at General Motors lineup, I'm talking visually. I am a very visual. I've always looked at automobiles for design. I've always just loved automobile design. It's just my own design that I like. But that in this particular instance, if you look at the high that was made back around about December, just about 40, and today's high is 39.73, and I have to use that peak A as General Motors, there we are, as a left side, right side price time action. It's got days and days to go. It's got up until the 8th of February to get to the high that was made of 40.01, and then the next high on the left side is that peak D high that was made on the 1st of December at 41.32. And this is the reason why I've been saying that the low that was made in October could turn out to be, and I'll do this just for a real quick moment here to show you that this could be the internal and residual lows that is really unusual, and that puts us in a trading band. This is the Dow chart. In a trading band a little longer, but specific areas could do very well, and that's exactly what we're seeing. For instance, look at the difference between General Motors, and I must say that Barra, whatever her name is, I think she got a huge break about a year ago when everyone's just praising her. She was there when General Motors was making all the big mistakes, so hopefully she's correcting all that. But look, Tesla, the lead participant in the electric vehicle area, has had a fabulous run from 101.81, the low it was made in January, to the high that was that December, to the high that was made at 180.68 on the 27th, 3 days ago. So when you look at it, let's just look at the left side chart and the middle chart. That's daily on the left and the weekly on the right, in the middle. Now look at this. You've got General Motors. Look at the work that's been done in General Motors. First of all, in the daily chart, very nice rally, nice gap up today. But look at the work with higher highs, but not yet higher lows. No, sorry, higher lows, but not yet higher highs. A couple, but not really consistent, because the major thrust has been that inside track repellent zone. Now we're tackling it. If all of a sudden in the next 2 weeks, and this is what I mean by looking at the market, why on earth with these cyclicals, General Motors is a cyclical, a deep cyclical, like a steel stock. And they cannot get traction until they have all-wheel drive now. They can't get traction until everything goes right. And I'm saying if you look at the monthly chart, everything's gone wrong. But if you look at the daily chart, this is a nice takeoff with two gaps that have been filled. One on the downside, now we don't know about the upside, but it did fill in the one on the left side. But what we're looking at is first time we're going to be able to tackle this with a higher, oh, it's the second time. Sorry, the second time that it's going to attack that with a higher low. That's really important. So I think General Motors is acting very well, and that's the reason why I do not want to go short the actual general market, because this rotation says at any point you can get buying. I'll be right back. Basil Chapman, Tiger News Hour, Basil 110, S&P's at 27.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month, and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So a question came in, what about the SPQQ, which is 3 times short the Qs? I just don't see that now, because this rotation says that if anything's going to hold quite well, if there is a rotation, then we might see Dow-type stocks continue to lag a little bit, and the Qs could hold better. So I just, not today, maybe tomorrow, and also with fund buying, it's just, I don't see it. So I had in my screamer list, popped up today, all of a sudden I have like 9 popping up of these very single-digit low-priced, more like IWM, more like the Russell 3000 type stocks. So ARR popped up. It's done that before. Arbor residential REITs trading up 12 cents at 6.28, up $1, up 1.87%. Peak A, B, C, D right now in the daily, leg D in the weekly. What's with this? And then I looked and I thought, well, Simon Properties, SPG, that's what I'm always looking at over the years. Well, lo and behold, it's gone from the 200-period moving average at 114. It's at 127. It's gone to a peak E, and in the daily, leg D in the weekly, and the monthly is starting to improve. So I'm just saying to you, I think that the lows that were made in October are pretty darn significant. Yes, we didn't get that major sell-off. There's still time for another residual. Remember, internal lows, and the internal low is the earthquake, residual low is the aftershock. It can be less, it could be more, it could be the same as the earthquake. You never know. And that's what I'm thinking, and that's why I'm saying to you that I don't want to be short. I want to be very selectively long, but that rotation is continuing. And even here, look at this, the HGX. This is the Philadelphia Housing Sector Index. I mean, look at that. Just started a brand new move. I think there's going to be a leg C in the daily, a leg E in the weekly, looking very strong. How come? Philadelphia Housing Sector Index. So this is definitely a market that is rotating through all the different areas. Have a wonderful rest of the day. Check out my opening call daily newsletter. I'll be back with Tom a little later on, and we'll see you tomorrow. Stay tuned for Steve and all the great programming coming up.